Today we're talking about the S&P 500, one of the most important indexes in the US stock market. But what exactly is it? Think of the S&P 500 like a giant basket that holds 500 of the biggest companies in America. So instead of buying just one company's stock, you're buying a piece of all 500 at once. These companies come from all kinds of industries: technology, healthcare, energy, finance, and more. That's why the S&P 500 is seen as a snapshot of the entire US economy. If the S&P 500 goes up, it usually means the US economy is doing well. If it goes down, it could mean trouble. In short, the S&P 500 is like America's financial report card. So how does the S&P 500 actually work? It's made up of 500 companies, but not all companies are equal.
Each company in the index is given a weight based on its market capitalization. Market capitalization, or market cap, is just the total value of a company's stock. For example, if a company's stock is $100 and it has 1 billion shares, the market cap is $100 billion. Companies with bigger market caps, like Apple and Microsoft, have a bigger impact on the S&P 500's movement. So if Apple's stock jumps, it can push the index higher. But if a smaller company's stock falls, the effect is tiny. This is why the S&P 500 is often driven by the top 10 or 20 largest companies. Now, why does the S&P 500 matter so much? For investors, it's considered the best single measure of the US stock market. When people ask, "How's the market doing?" they're usually talking about the S&P 500. It represents about 80% of the entire US stock market value. It's also the benchmark for many retirement accounts, mutual funds, and ETFs. In fact, one of the most popular investment choices is the S&P 500 Index Fund, which simply tries to match the index's performance. Historically, the S&P 500 has returned about 10% per year on average over the long run. That's why financial experts often say, instead of trying to pick the next big stock, just invest in the S&P 500. So let's recap. The S&P 500 is a basket of 500 of the biggest US companies. It covers all major industries, making it a snapshot of the economy. Bigger companies have more influence thanks to market capitalization. It's the go-to benchmark for investors around the world, and historically, it has provided steady long-term growth. The S&P 500 isn't just an index. It's a reflection of American business, innovation, and economic strength. Whether you're a beginner or a seasoned investor, understanding it is the first step towards smart investing. So next time you hear the market is up or the market is down, you'll know they're probably talking about the S&P 500.